Imagine a world where you are instantly able to simulate a realistic experience of most aspects of your life as a digital avatar, regardless of the distance. This is the Metaverse, the convergence of physical and digital worlds in a way that is real-time rendered and endless in its ability to offer shared experiences. Virtually, that is. Think of it as a 3D version of the internet. With the Metaverse industry projecting to grow to $824.53 billion by 2030 from only $27.21 billion in 2020, this represents a projected compounded annual growth rate of 39.1%, 24.27% higher than the average annual return of the S&P 500 over the last 10 years. The Metaverse truly seems to be the future of technology. So, what's the best way to invest in the Metaverse? Before diving into the investments, we must first understand the buzzing industry. The Metaverse landscape can be divided into 4 layers. Number 1, content user and experiences. This top layer contains all businesses and services built on top of the Metaverse, which include creation, sale, payments, and financial management of digital assets such as NFTs, crypto, and gaming currencies. Some companies within this sector include Meta, Fortnite, Activision Blizzard, Nintendo, OpenSea, MetaMask, and Uniswap. Following up on the second layer are the virtual platforms. This layer encompasses computing, programming engines, virtualization, and tools that produce virtual content and assets. Companies within this layer include Google, Microsoft Azure, virtual platform players like Epic Games, Roblox, VRChat, Wave, and Unity. And for the third layer, we have interface and access. This layer produces the equipment needed to access the Metaverse, including VR headsets, mobile devices, future technologies like smart glasses, holograms, and advanced haptics. Some corporations include Apple, Samsung, Oculus, Vario, Neuralink, and Avigant. And for the fourth and final layer, we have network and hardware. As the Metaverse will be built in real time, this layer provides the means needed to establish decentralized and the high bandwidth connections from network providers. Products include cutting-edge sensors, batteries, and processors for mobile devices, smart glasses, and wearables. Network companies include AT&T, Verizon, T-Mobile, Subspace, and Fastly, while some hardware companies include NVIDIA, Qualcomm, AMD, and Intel. These 4 sectors together generate the basis for the Metaverse to function properly. For example, VR headsets would require an internet connection, which in turn needs a platform to run on and a method of making money. And with the 4 layers explained to you, we now understand the components of the Metaverse. So the question is, what are some of the best ways an investor can gain exposure to this market? Before we move on to the investment opportunities, please hit the like button and smash that bell icon for more content. The easiest and most reliable way to gain exposure to the Metaverse market is through buying stocks of companies within the 4 Metaverse layers. The best Metaverse stocks to buy in 2022 are: Number 1, Meta Platforms. Of all the possible plays in the Metaverse segment via the equity market, the best option still lies in investing in Mark Zuckerberg's data and cash-rich Meta Platforms. He has taken the Metaverse sector by storm by investing $10 billion last year alone through acquisitions and nurturing in-house tech. However, for the first time, Meta reported operating metrics for its Reality Labs division, which makes virtual reality goggles and smart glasses that amounted to a loss of $10.1 billion and $5.8 billion in the first half of 2022. This led to an overall drop in the bottom line of Meta Platforms, which market participants didn't take too well, citing that Zuckerberg's investments are too overly aggressive. In addition, Apple also recently changed its IDFA policy in light of the numerous privacy infringement issues, which was the only means for advertisers to precisely target and track users within apps on iOS devices for personalized ads. This policy change can prove to be disastrous for Facebook, as roughly 97% of Facebook's income is generated through advertisement income. The company estimates a $10 billion revenue loss per year due to this change. However, with the projected growth of the Metaverse industry, Meta is still in a good position to benefit as a key player in this booming field. Zuckerberg's overly aggressive investments into metaverse equipment and logistics can be considered a strategic foresight when considering the expected compounded annual growth rate of nearly 40% for the metaverse industry. Meta is in a prime spot to capture the $8 trillion market on top of its vast free cash flow that's generated from its family of apps. What's even more attractive about Meta's stock is its current price tag. It currently trades at 13 times its last 12 months earnings after reporting the $10.1 billion operating loss from its virtual reality division. However, Meta is a debt-free company and its stock price actually trades at the same levels as when it used to report yearly revenues within the $11 billion to $12 billion range compared to their $28 billion yearly revenue as of right now. This makes Meta Platforms rather undervalued, and with the $35 billion plus of free cash flow it generates, Meta stock is in a prime position to bounce back. And next up on the list is Roblox, a $23.7 billion company which is an online entertainment platform famous for its video game and also allows users to develop games of their own. The company is one of the purest plays in the metaverse space, as it has built a complete ecosystem that has its own digital currency called Robux with 50 million plus daily active users. The company went public during the pandemic and witnessed a blockbuster listing as users spent their time playing online games during the lockdown. With the interest rate hikes affecting all tech stocks and user growth stagnating in recent quarters, the stock has dropped 73% from its November 2021 high. In addition, as users started going back to school and work, daily active users fell in the first half of 2022 from 54.1 million to 52.2 million, spooking investors who thought growth has stagnated. However, the June and July update from the company showed that since June of 2022, their daily active users have actually grown to 53.3 million and are expected to increase. In addition, Roblox-related cosmetic sales in June grew 8% year over year to $217 million, showing strong prospects for further growth potential. Investors need to be nimble while investing in Roblox and closely tracking earnings and management guidance, since Roblox only recently went public and doesn't have the substantial track history compared to more established companies such as Meta Platforms. However, if the metaverse does blow up in the next decade, the network created by Roblox makes them the most comprehensive company out there to capitalize on this opportunity. And for our last and final player in the stock list, we have Microsoft, who recently launched a line of virtual reality headsets known as HoloLens, which focuses on mixed reality and is built for enterprise. To delve into the gaming sector and with the vision to get the metaverse tech into consumer gaming, Microsoft also acquired an Activision Blizzard for $69 billion, giving them access to 361 million monthly active users. Microsoft seems fully committed to the metaverse industry while also harboring a diverse portfolio of both hardware and software in other tech markets, making it an ideal long-term investment due to their stability. And now that we've covered the top stocks to invest in, let's talk about a safer and long-term approach to investing in this sector. This segment of the video will focus on investing in Metaverse ETFs, which grants exposure to the entire industry rather than focusing on a single corporation. First up is the Round Hill Ball Metaverse ETF, ticker symbol METV. METV is one of the first and most popular ETFs in this segment trading on the NYSE ARCA exchange. It has an assets under management of $471 million and an expense ratio of 0.59%. Below is a snapshot of their top holdings, in which primary holdings include Roblox at 11.42% and Nvidia at 8.17%. Another popular ETF is the ProShares Metaverse ETF, ticker symbol VERS. Launched in March 2022, ProShares Metaverse does not directly invest in cryptos and NFTs, but rather tracks the Sole Active Metaverse Steam Index, a representation of stocks of companies that provides or uses tech to offer products and services around the metaverse. This fund has an expense ratio of 0.58%, with primary holdings including Copen at 6.17%, Amazon at 4.9%, and Roblox at 4.86%. The metaverse is still an emerging space, but nonetheless a very attractive industry, and diversifying in ETFs and companies with market dominance is probably the best way to capitalize on this booming market. With the current hype in electric vehicles and renewable energy, the demand for lithium has skyrocketed, but the supply is insufficient. Come check out why the lithium industry is an excellent place to invest your money right now. Thank you for watching, and please subscribe for more videos.